Good morning, everybody. How we doing on this fine Friday? Make sure you throw one in the chat, right? We are here trying to get 1% better. We got more than that yesterday when we roasted the market to the downside in the morning, caught the falling knife, and then made our money on calls to the upside in the afternoon. And I'm excited to see what this Friday has to offer, right? We'll see what the market has in store and if we can kind of leverage any more opportunity left in the week. If not, completely fine because it's been a great week. We've had a number of bomb weeks in a row, right? And that's really all that you can hope for, right? Is to execute, learn, and make money. That's what we're here to do. So happy Friday. I'm going to dive into what we got going on here. If you're new, just to give you some background information, this is the pre-market prep session. So this is what we do each and every day, 8:45 a.m. Eastern Standard Time. Before that opening bell, to make sure that we have all the news, notes, information, analysis, and occasionally trade ideas necessary to kill it in markets. Now, if you were here yesterday, you got free game because MGM puts called that out, right? MGM with the hourly double top, and those MGM puts paid quite nicely, right? So if you were here and you were, locked in and you executed, you made money and you did all that for the free. So that's the amazing thing about being able to read charts, is that when you do and you hear news, you can instantly break down, okay, where's the opportunity in this news in 30 seconds or less and make money off of it, right? It's a beautiful superpower that the market allows you to have, but you have to invest the time and the education in order to hone that superpower, right? So let's see here. And good morning, everyone. Yes, Vivian, Michelle, Alicia, Coco, Sharon, Detrice, Cynthia, Paul, good morning. Great morning, right? Yes, I love it. Greetings, kings and queens. Let's go. Fabulous Friday. I'm loving that energy. It's necessary, right? Because what you bring into the market is what the market reciprocates. You drag your feet, it'll drag its feet. If you're ready to rock and roll, it will be ready to rock and roll. This was my first day back out on the running trail. Felt like I was going to cough up blood, but it is what it is, right? We went ahead and we made it happen. I know it was just because I haven't been in a while. Coming back was feeling like below, a little under the weather, stuff like that. Still am, but just got to get out there. Got to get out there and make things happen and get back on your routine. So that was me doing the hard thing this morning. I don't know if anybody else did some hard things today, but it ain't going to get any easier, right? So you might as well look it in the face and just do it rather than sit there and say, oh, man, it's been a while since I've done this. It's going to be longer if you never do it, right? So whatever you need to do, just do it. Do the simple thing. It's not always the easy thing, but it's simple. When you stop to overthink stuff, that's when you walk away from it or you don't do it. If you're like, hey, I need to put in some time, on the back testing tool on Thinkorswim, right? The on-demand feature. Oh, I need to put in some on-demand feature trades. You sit there, you're like, oh, but I actually have this one hat that I haven't been able to find, and I want to look for that. And I've got, my kids got parent-teacher conferences coming up in a month. Maybe I should prepare or take notes for that. So you start finding all these other things you could do. Don't think about it. Do the simple thing. A lot of times in life we overthink. Humans honestly don't need to be as smart as we were made to be, right? A lot of people would be a lot better off if they just did, and then they worried about all the other ramifications later, right? So just act, do what you need to do. Don't overthink it, because then you're going to talk yourself out of it. Just do, right? That's, I guess, the motif, right? The theme of this morning is just do. Don't make it complicated. Don't give anxiety the chance to settle in. Just execute, right? In terms of top news here, earnings kickoff. It's that time already. Wow. 3 big Wall Street banks are reporting Q3 earnings today, giving investors a window into how the sector is dealing with elevated interest rates and muted capital markets activity. JP Morgan Chase, ticker JPM, and Wells Fargo, ticker WFC, were the first to report, with both banks notching a quarterly earnings beat. Citigroup, ticker C, is also slated to report its results today. Bank of America, ticker BAC, and Goldman Sachs, ticker GS, will post their earnings on Tuesday. Morgan Stanley, ticker MS, rounds out the lot on Wednesday. Now, in terms of market expectations, Morgan Stanley analyst Betsy Graysick noted that investors have been more optimistic about banks since the latest industry conference, and that raises the bar for bank earnings, which lenders will likely not clear. Quote, we expect net interest margins to be under pressure for longer, not much expense flex until at least January in weak loan growth, she said. Now, Goldman Sachs' Richard Ramsden said three headwinds will be in focus: the net interest income trajectory in 2024, the impact of the Basel III endgame, and the potential downside from credit and reserve increases. Now, net charge-offs are expected to be another weak spot as delinquencies return higher and more normal levels. As delinquencies return to higher and more normal levels after rates have climbed steeply in the past year. The four biggest U.S. banks are expected to see their net charge-offs, which is the amount they write down for bad debt, jump to $5.3 billion in Q3. That's the highest for J.P. Morgan, Citigroup, Wells Fargo, and B of A combined since Q2 of 2020. Now, in terms of seeking alpha commentary, quote, the common and preferred stocks of too big to fail mega banks are buys. Most smaller banks are holds, and banks that have runs or rumors of insolvency are sells. So that's pretty common sense right there, said seeking alpha analyst Logan Kane, adding that JP Morgan looks undervalued compared to its long-term prospects. Ian Bezek expects Wells Fargo to fare better than many of its peers on asset quality, while Giannis Zormpanos continues to be very bullish on Citigroup, considering its strong turnaround progress. So this is just speculation, right? We'll see what ends up happening with these banks. I think a lot of them report here before the bell. Let's see what we got. What do we have? Citigroup reporting. I forgot just that quickly. You guys know how I've got that. Goldfish memory. Citigroup, Bank of America, Goldman Sachs. Let's check it out. Banks are always, the companies that report first, for those who don't know, and they kind of set the tone for the earnings season. It looks like all the banks right now are moving positively. Bank of America is looking solid right here, right? At Bank of America, actually, let's see what that 2730 was. Okay. Yeah, Bank of America can close above 27.3 on the hourly. I like Bank of America calls, right? So next week, lottos today, if you are fine with risking it all, right? Could be incredible earning potential with those lottos, but banks are on heavy watch here. You got a very, very nice hourly bull flag on Bank of America, and it is testing breakout. So just make sure that you're aware of that, right? Set your alerts, everything that you need to do. Don't sleep on the call outs that are given right here in the pre-market prep session because they pay, i.e. MGM yesterday, right? Which I called out for free. Let's see here. Let's set an alert. Okay. So got a little alert right now for Bank of America. Just setting that alert on the pre-market high that it has currently. Want to come back to it. And maybe I'll take a little note down on my notepad beside this, right? Just say BAC. Let's check out Citigroup. See what Citigroup has going on. Citigroup, same thing, pushing right now. The thing is, their guidance call isn't until 10 a.m. Central Time. Don't know what time that is, Eastern Time. Let's see. Does that look more interesting than Bank of America? I mean, it's currently in the middle of firing a bull flag that it has going on, but I like Bank of America's chart a little bit more. And then what was Goldman? Goldman Sachs. I mean, the thing is, if all these banks do well, then the other banks are likely to follow. We'll both be notching. Okay, so JP Morgan already reported. Wells Fargo already reported. You guys know how I feel about Wells Fargo. I do not. I ain't trading no Wells Fargo. JPM has been struggling with this 147 level, right? Really, if I want to get granular with it, I'd say 146.77. So we're above that now. So I'd mark off the pre-market high at 147.56. And then if we go up to break that bad boy and hold above, then I like JPM. If we come back down to 146.77, and hold it, then I like that for JPM as well. Let's see here. Retesting. So really the big thing, to boil it down, to make it nice and easy, JPM over 146.77 on the hourly. I like it. It's quite bullish. Those calls can pay. And we can roll with that. Let me see here. SPY's crossed above. SPY's on the move to the upside. Are we shocked? No. Right? So push above. JPM testing pre-market high. Nice. Yeah, so that's pretty much it, right? We like BAC. We like JPM. Bank of America and Goldman Sachs will post their earnings on Tuesday. Okay, so we still have Bank of America and Goldman that have to report, but it's nice to see that Bank of America right now is riding the wave of the others. So we'll see, right? Depending on the guidance call that we get, that can throw a wrench in things. So just be ready for that. J.P. Morgan's earnings call is when 7:30 a.m. Central Standard Time. That might be right when the market opens. So be aware, right, that the guidance call can affect what goes on here because again the report card is the actual earnings, but you also want to the guidance is arguably more important than the actual earnings data is, right? You want to know what the outlook is moving forward, not just what the past data has been, because the past won't pay, the future does. So yeah, be aware of that, right? That's like a little caveat to what we have going on here with those bank plays. And everybody throw a 2 in the chat if you understand what I'm saying, right? If you're following along, if you're on the same page as me, right? We're seeing eye to eye right there. We got some money making opportunities already. Bell ain't even rang yet. Gotta love it. In terms of economic news, CPI still hot. Retail inflation slowed again in September from the prior month, but came in hotter than expected as rental costs surge, accounting for more than half of the increase. Growth, oh, there we go. We got even more stuff going on. There we go. Just JPM pushing above that previous pre-market high. Let's see here. Okay. Growth in the consumer price index slowed to 0.4% month over month from a 0.6% increase in August core CPI, which excludes food and energy, stayed steady at a 0.3% month over month increase. The latest data pushed stock markets lower while treasury yields rose. Investing group leader David Alton Clark said that the data indicated that rate hikes are by and large over, but Boston Federal Reserve President Susan Collins said she wouldn't take further tightening off the table yet. Note that the producer price index growth had also slowed, but was still stronger than expected. Let's see here. Yeah, that we already went over right yesterday. It's just funny also how they're like inflation isn't going up, excluding food and energy and like they take everything that you need to live and they're like all of that stuff withholding inflation has not increased. Yeah, man. I wish that I could tell my bills that. Like I wish that when my bills came in, it was like so actually my real bill excluding food and energy and housing, right? And what my actual bill for the month is $10, right? Yeah, I wish I could do that, right? It's kind of ridiculous that the government is able to do that and show that as progress, right? Like you can't just say, "Oh, yeah, I love that. Tage, my man, you got my back. It's 11 Eastern time." But yeah, it's crazy. They're like, "Look, inflation has gone down if I take out all the most expensive things." Thanks for that. That's very impactful data you got going on there. In terms of mergers and acquisitions, last hurdle cleared. Microsoft's revised $69 billion offer to acquire Activision Blizzard has passed muster with UK regulators, clearing the way for technology sector's biggest ever acquisition. The UK's Competition and Markets Authority granted consent for the revised deal today, which excludes Activision's cloud streaming rights that will be sold to French firm Ubisoft. The regulators' objections to the mega deal marked the last major global hurdle for the acquisition that has been more than a year and a half in the making. Seeking Alpha analyst DJTF Investments had rated Activision a hold, given the deal value's limited upside to Activision's shares and uncertainty over the deal's closing date. Now, in terms of AI news, closing loopholes as chip export controls are being finalized in the U.S. Washington is considering ways to close a loophole that gives Chinese companies access to American AI chips through units abroad. The Biden administration has been cracking down on chip exports to China, with updated rules expected as soon as next month. It is also looking to close the loophole that allows Chinese parties to access U.S. cloud providers like Amazon Web Services. NVIDIA and AMD are two of the most notable semiconductor companies that have been impacted by the U.S.'s export controls in recent months, while Dutch chip equipment maker ASML has also been in the crosshairs. So in terms of today's markets, everything is different than when this data came out, so not really important to go over it. Consumer sentiment data we get at 10 a.m., that's important. That will definitely impact how we move here. In markets, that consumer sentiment data will be important. SPY looks like it'll open green, right? We're opening above yesterday's close despite sitting flat for most of the night, heading a little bit lower, and then now heading higher into open. So, yeah, I'm excited to see what we have going on today. Yesterday's sell-off was just retracement of a breakout on a number of different fronts, right? We had a daily double bottom breakout on SPY. All we did yesterday was retrace that daily support, which means that we should bounce there and find room to the upside to push. And then we also had an hourly bull flag that SPY retraced yesterday with that sell-off, and we held that as support. So we're bullish on the hourly, bullish on the daily, and we're bullish on the weekly because we fell to weekly uptrend support. We put in a hammer last week, and we already started pushing this week. So we're bullish on the hourly, daily, and weekly. I'd say that has our prediction kind of sealed in for today, right? So we'll see what we end up getting today. We could just go back down and sit on top of these supports. There's a chance that happens, but more likely than not, we can see a big move like we saw yesterday, or last week on Friday. So I'm excited to see kind of what ends up panning out. But regardless, there will be opportunity in the market because it's always there. The key is your mindset. That's going to be the distinguishing factor. Do you have the mindset? Because that's the lens through which you perceive opportunity, right? So make sure that your mindset is right and your pockets will be right. It's as simple as that. If you think you can sidestep the mindset, cut around doing what you need to do, you will never get the success you want to get, right? It's as simple as that. If you don't want money, then try and shortcut, right? If you do the simple thing and do what's necessary, you will make money. A lot of people do not want to do the simple thing. They want to do the even simpler thing, which is just nothing, right? Now, in terms of what else is happening, we'll finish up with our rapid fire bullet point rundown here. More than 7 million Americans have received updated COVID shots. Qualcomm plans job cuts in California to slash costs. Tesla to hike wages for German plant workers amid union dispute. Cassava, ticker Sava, SAVA, falls on probe into Alzheimer's drug data manipulation. Disney, ticker Diz. Comcast hire banks to arrive at a Hulu valuation for sale. So Disney looking to sell Hulu. Wonder who would get in on that. Maybe Apple? I don't know. Apple, wanting to kind of bolster its content ranks. Dollar General, ticker DG, brings back ex-CEO Todd Vassos to take the helm. China eyes setting up stabilization fund to boost weakening stock market. California preparing lawsuit to block Kroger and Albertsons ACI. Kroger, their ticker is KR. Albertsons, their ticker is ACI. California is preparing a lawsuit to block their deal between the two of them. Boeing, ticker BA, and Spirit Aerosystems, ticker SPI, expand inspections of 738 MAX 8. And then GM EV battery plant could face $270,000 in fines for safety violations. I feel like $270,000 is nothing to a huge multi-billion-dollar company. So that's like somebody coming and charging us $25. Cool. It is what it is, right? So with all that being said, guys, we're ready to dive into the market, what we have going on today. We've gone through a lot of potential money-making opportunities. We've gone over the overarching sentiment for SPY and the market as a whole, and you're set up to succeed. That's the big thing. If you fail to prep, right, you prep to fail. And that's the main thing. Go put in the preparation, and when it's time, execute, do the simple thing, and you'll be able to close the gap between where you are and where you want to be, right? So congratulations, everybody, on an amazing week. Congratulations on executing. Congratulations on learning. And have a safe weekend. I'll see you guys back here on Monday for our next pre-market prep session. Have a good one.